Everybody, it's nice to see you. Your Excellency, Mr. Ghanim, it's nice to see you again. We were in Bangkok last year at the ITU, and I'm sure I'll see you in Doha in just a couple of weeks, and I applaud your work. Noura, thanks very much for the invitation to chair on the third day. We've digested a lot in the last 2 days looking at the future of content creation. We know this transition from traditional media into the mobile space, and then we've had a chance to get a glimpse of what the growth is going to look like over the next 2 to 3 years, particularly in the demand for gaming. We had the opportunity to welcome Gerhard Zoller, the president of Turner International, and he was suggesting we need to reach the consumer no matter where they are. We have the opportunity today to see where the bankers are looking at in the next 3 to 4 years. As you know, I've been in financial news for the last 20 years, and we often say that the stock market's a good lead indicator of where the world's going in the next 9 months. The benefit of our panel now is to look at where this industry is going in the next 3 to 4 years. Where's the seed capital going? What are the accelerators doing? What does it mean for global content? But very importantly, and that's why we're sitting together today, what does it mean for local content going forward? Whether it's the job creation of the future, what is the content creation, and what should you be looking at as content creators to hop on the next wave for the next 3 to 4 years, as I suggest. Let me welcome to the stage here, one by one, Omar Mahmoud, the Chief Executive Officer of the ICT Fund. Ahmed Alfi, the founder of Sawari Ventures. Walid Hanna, who we didn't see in the green room just yet, but he might be joining us up on the stage if he's not arrived yet. There he is, perfect timing. He timed that entrance just right. Walid Hanna is the managing partner of MEVP. Chris Rogers, partner of Lumia Capital. And Khaldoon Tabaza, the founder and managing director of iMENA Holdings as well. Great. This is a star-studded cast when it comes to early capital going into the market today. I think it would be a good place for us to start on what are we looking at. Now, what we've digested for the last 2 days is the expansion going into, of course, the mobile space, but what content works. One of the thoughts I had 3 or 4 years ago when we sat down to have a conversation about media, even going back 6, 7 years ago, the entire discussion was about convergence, the telecom operators wanting to buy content, traditional media wanting to buy social media companies, the upstart companies, no longer upstarts, but very mature companies like a Google or a Yahoo or a Facebook wanting to get into content creation and gravitating towards traditional media. That concept seems to have disappeared. Everybody seems to want to stay in their own space, do what they do best, and the discussion is about collaboration and letting the younger companies with new ideas percolate to the top and collaborate that way. Do you think that is the formula of the future, where people don't need to converge on a very large scale to create giant companies that often are not nimble, and let the young upstarts come in and foster that growth in the future? Is that a fair comment?
I think absolutely that's a fair comment, and I think a lot of the larger companies have come to the conclusion that we might as well let the world be our experimentation lab and bring up the ideas that may or may not work, and we have enough capital and their profit margins are high enough that they can just buy them. And there's no need to invest and recreate the R&D that the world is doing for you and the market test that the world is doing for you yourself, and just wait for it. You can collaborate at the beginning, but most of them end up making, acquisitions that a few years ago the numbers were inconceivable. And 100 million, 500 million, $1 billion, $5 billion for companies that 10 years ago would have been thought of as much smaller. Yeah. So it's the numbers are getting much bigger, but that's because the companies have the luxury of waiting and having someone else do all the work for them.
It's interesting, having listened to His Excellency, Mr. Ghanim, about the regulatory environment for telecom operators. As you know, particularly in the United States, there's a discussion of AT&T and others wanting to buy and be in the content space. When you look from afar now, is that concept gone? We don't need to have the telecom operators be content producers? They just collaborate going forward, Omar?
So in terms of the content space, the ICT fund, of course, is part of the TRA. You can say it's mandate to fund the telecom sector and the ICT sector. But in terms of content, what I see here is actually you have. Let's go back to two analogies. One is let's say the Maktub acquisition here, just to relate it back to the region.
Sure.
So their challenge was to how can they solve the content space, which didn't have Arabic email back in the day. You didn't have Arabic email as a platform, so they came up with a solution, and they actually were acquired thereon. So that triggered, for example, a number of pivotal things. For example, if you say in terms of content-wise, their challenge was to get Arabic content online. So to come back into the funding space, what I've seen is people are consolidating into the mobile space. So moving on, let's say you have Google, for example, acquiring AdMob, which was in terms of providing content, which is digital advertising on mobile space. So you see everyone is moving into, I would say, a digital mobile environment at the end of the day. And with us as an ICT fund, we are providing and actually deploying funds in terms of the digital space with the Arabic initiative, which we're funding, in addition to actually funding the mobile transition here in the country. So that kind of puts it in a context.
When you suggest you're funding the transition, what sort of companies are we looking at? It goes back to my point. Google was staying in its space, right? It wasn't going too far away from its space, so it doesn't want to throw money into a space that it can't actually apply into its platform.
You know, I just want to interrupt for a second because I wouldn't put the nail in that coffin yet. You know, Google and Facebook and others are spending a lot of money on connectivity and very focused on those billions of people that aren't connected yet. And they may well be in the carrier-looking space before you know it. And then you see people like Comcast in the US with their tens of thousands of Wi-Fi points that could essentially replicate a mobile network. So I'm not so sure people are staying in their lanes. And I think you're going to see some people getting out of their lanes.
The telecom space becomes irrelevant in that kind of Wi-Fi world, less so important on the triple play that we were talking about yesterday.
Well, no. I mean, now you're defining it as a telecom space. Let's just use it as connectivity.
Yes.
It's not at all irrelevant. It's the most relevant point. But I just was trying to state that I don't know that the traditional players will be the only ones in that space.
What are your thoughts, Walid, on this?
Well, you know, we invest in content and in web and mobile companies. We have two companies that are very highly reliant on telco bundling plans. Okay, that's how they market themselves with data plans. These are Anghami and Lamsa. Probably you've heard about them. But let's go back to what Omar was saying about how important the Arabic content was, because we're really focused on this one. And I'd like to announce our first exit, which is a fabulous one. It's a content play. As you know, in the Arab world, we share a lot of things in common. Although it's like 22 countries, we share the same language, a lot of culture, a lot of same food habits, entertainment habits. We've invested in a company called Shahiya.com. It's only about food, online food recipes. It was just sold to a Japanese listed company. And that's how important the Arabic content is becoming. We've done a great return on it, and it shows how globally, I mean, the world now is looking at MENA as an acquisition target, and we're heavily investing in content, by the way, Arabic content.
Let's take a step back. Where did that company come from, and where did it get its initial funding? Because this is always the complaint. It's less a complaint now, by the way. 10 years ago, this concept of the VC funds in the Middle East wasn't nearly as active, and people are starting to change the mentality and provide the seed capital. Where did they get their initial funding for those who want to try to create companies locally here? Is it hard to do that? The money, where does it come from? What's the best base in which to set it up? Is the UAE the most active base in that mentality, in your view?
Absolutely. We're heavily now investing in the UAE and looking for startups in this part of the world. But Shahiya, for example, came out of Beirut. It's a small team of 4 people. Now they're 15. We invested $500,000 in this company, in 2012. That's less than 2 years ago, and exited at $13.5 million. That's a 6x return on our investment. But the whole revenue line of Shahia, which is an online advertising-driven model, is less than $1 million, and it was sold like 15 times revenues to this Japanese listed company. It's a fabulous success story. And one more thing, by the way.
It's excellent.
The beauty part of this is that there was 4 co-founders, but the main founder and CEO is a lady. Her name is Hala Labaki, and we're extremely proud of this lady entrepreneur who made it this way. She's a millionaire now. So that's the beauty.
That's the beauty of it. Khaldoon, let's get your thoughts on, I was thinking about what works. I'm originally from California, worked on the East Coast of the United States for about a decade as well, and went into the MIT space to see how the university can serve as the cluster, the center of the cluster to foster innovation. Silicon Valley is fabled for this. You go up to Redmond, Washington, and the whole ecosystem around Microsoft here. It's a very different model that we're seeing in the Middle East. For example, what we see with 2454, it's creating the environment, with the government creating the environment for companies to want to come in. Is that model working in the Middle East? Is this the cluster that we have in the region, or are we seeing other clusters come forward here to create the companies that Walid was just talking about?
So I think clusters are extremely important in the development of the online industry in any region. I mean, entrepreneurship and excitement is contagious. People help each other. Investors would like to come there, and founders, basically most of the successful founders of new companies come up from existing successful companies that they've worked for before. I think 2454 has the potential to be one of the most successful clusters in the region. And I'd like to touch very lightly on an initiative that iMENA, Ittisalat, and 2454 have announced yesterday to start the first industry development working group in the region. So it's basically an informal alliance of 3 organizations that we're going to invite other organizations to as well, that's going to sit together and address the challenges of the ecosystem in the MENA region, including the scarcity and high expense of talent, the complexity of expanding between the various markets, and additional challenges related to market mismatch between models, between business models and markets, and try to act as a connection, as a bridge between the industry and governments. Having talked about this, I would like to go to your question of what works, and actually touch on the first question that you've asked about of where this industry is going. I think it's easy for us in the Middle East to learn from what happened in other emerging and developing markets. And this is something that is extremely important. I think the internet in emerging markets have developed very differently from other markets. And I actually agree. I don't think that we're going to see any big acquisitions by a Facebook or a Google or an Amazon.com, in the Middle East. And the reason for that is that there's a clear, basically, delineation today between global business models and regional business models. And the business models that we need to look at in this part of the world are those that have a defensible barrier to entry, i.e., look at restaurant reservations. You can have an extremely successful open table-like business model in the MENA region. We happen to have an investment in a company called Reserve Out, which provides online restaurant reservations in the UAE, Lebanon, and Jordan. And that business model, once you have the top 150 restaurants in a country, it's impossible for an international player to be able to come to this market without talking to you. On the other hand, if you look at the business model of e-retail, 80% of e-retail, e-commerce, e-retail in the MENA region still happens with Amazon and Net-a-Porter, etc. All it takes is for Amazon to come and establish a logistics center in the UAE. That's it. A warehouse, arrangements for basically distributing locally, and this whole local e-retail industry will take a huge hit.
It's interesting you say that, because I profiled Souk.com for Marketplace Middle East and went in to see their model. And they were complaining, even amongst themselves, they couldn't have one logistics center in the UAE to manage Kuwait or Saudi Arabia, or even going into Lebanon. I mean, you have your own barriers to entry, which actually allows an Amazon to come in. I mean, this is the reality, right?
It's exactly. I mean, if you look at e-retail, the only two differentiators that any e-retail company can have is how cheap can they buy products and how fast can they deliver them. And those two points are not internet business models. While, for example, if you look at another model like classifieds, it's the most amazing, most scalable business model in the internet, where you see amazing success stories in each and every part of the world. Any country that has a population of 5 million people has the potential to produce a $200 million online classified company. We've already seen almost the death of print classifieds in the US and Europe, and we've seen most of the classifieds companies either transforming themselves into online classifieds company or actually dying. So these are the business models that we're actually seeing them succeeding tremendously in the MENA region. I mean, in the last 3 years, we've seen print classifieds declining revenue by 30% year on year, while we have seen amazing growth in online classifieds. And that's a platform that you build. You need to get users there, and then it scales. It just scales and scales and scales in an unbelievable manner, and it becomes, a money printing machine, essentially, in a very capital efficient manner. So I think we have to be very, very careful in the MENA region in what business models to go to, and look and basically learn from what happens in other emerging markets. I think there are what we call the early win business models, which are classifieds, marketplaces, not e-retail, so e-commerce marketplaces, payment services, and online advertising, where Shahia, basically has achieved success. So this is, in many of the times, we're misled, sometimes by hype, sometimes by, basically, ourselves, sometimes by just looking at what happened elsewhere and seeing, we want to be this and we want to be that, without really going into the details and investing our funds and our effort in what really could create huge successes.
Okay. I just want to remind the floor that we're open to questions. I'm getting them on the iPad. The last 15, 20 minutes, we'll also take questions from the floor with the microphone. I just want to make sure we have the microphones there. Good. We have one on this other side. Perfect. So just raise your hand. It's a little bit dark for us to see it, but I want to make sure that we have an open dialogue with the floor as well, particularly from those in the region who want to try to start up companies and have questions, real questions about that. Now, I want to cover this question as I started, and that is to look 3 to 4, 5 years out of what's hot and what's not, right? It's not easy to kind of pick the next winners in the world, but I think we can try to pick the space in which you're most excited about, which leads this group here to start thinking about different companies they would like to be involved with. So pick the 2 top spaces that you think have the most potential. Khaldoon talked about some of those already for him. How about yourself, Ahmed?
I would have to say that gaming and education, and possibly combining the 2, but definitely gaming as a standalone, I think is probably gaming and gamification of existing services and existing content. And that's where I think we're going to make a big focus. And
let's pause it for a second. When you say gamification of existing services, let's be specific of what you're thinking and ideas that you've seen already.
Well, let's start with gamification of education. Okay, a lot of the classes we have we actually every once in a while start a nonprofit. We started a nonprofit called Nefhem, which is my favorite company, nefhem.com. I think we're the #1 educational site in Arabic. We do 100,000 free video lessons a day covering Egypt, half the Saudi and Syrian curriculums, and our plan is as a nonprofit to cover all of the public school curriculums in the Arab world, again, offer for free. So starting now to talk to some of the game companies to develop interactive games where the student is hearing, playing, teaching, and recording their own lessons and trying to integrate it all into some kind of a game where it enhances the educational process and the absorption of the information.
Good. Obvious question. I'm sure our audience is thinking, what's the business model if you're giving it out for free?
It's a nonprofit. It started as a business. And we realized that we're in the education business and the need is so great in the Arab world and there are so many problems. Basically a lot of our business attacks social problems and try and make a profit out of it. Halfway through the process, my two co-founders and I decided we're going to make this a nonprofit and give it away. And so the business model is advertising to keep it self-sustaining, and we've made it into two separate nonprofit companies that operate the business.
Interesting. And can you collaborate with the complaint is we have to create 100 million jobs by 2025. We keep on pushing that date back, but it's actually 2020, right? That's the challenge in today's world today. But can you actually have collaboration with government where it's complementary and doesn't clash with what's in the classroom? I know this has been a challenge in Egypt, for example.
Well, in Egypt, collaborating with the government's difficult because it keeps changing for the last 5 years. So hopefully, we'll have somebody to collaborate with for a while. But we've actually decided to go it alone for now. We take the government curriculum and teach what the government mandates has to be taught. We don't argue about whether it's good or bad. Somebody else fights that fight. And then we're now getting into vocational training where we're working with the private sector and videotaping their training programs for somebody on how to use a sewing machine or how to work in a factory and so on, and trying to improve employability. We're not doing certificate programs, just general content to improve employability among the working blue-collar jobs.
Which is almost vocational training is what we're saying.
It's vocational training, exactly.
All the way. Chris, let's pop over to you and then I'll come back to Omar. When you look from the outside in, what are you excited about?
So Lumia invests in the U.S. and in a number of emerging markets. So we do have a little bit of a different perspective, and where I would be focused in the sort of 3 to 5 year timeline would be in the enterprise space. And that isn't to diminish the value of the consumer here, because it's driving tons of things and adoption and the move to mobility. But I think if you look where else money is going to be made, you look at enterprise apps and different forms of using the mobile in the enterprise. And I think that's where we'd be looking at on that timeline.
Interesting. We have a lot of questions from the floor that have just come in. This is a good one following up to what I was just bringing up. How does a budding entrepreneur get exposure to VC funds, accelerators, in the rest in today's environment where we're starting to see percolating of ideas? This generation is extraordinary with the ideas that come on the table. Omar, do you want to handle that? Khaldoon, it'd be good to get your thoughts, and Walid as well.
So to answer the entrepreneur who's asking, be on the mobile space. Number one is be on the mobile space. That's where everyone is going. Give you some examples. For example, Facebook was never on the mobile space in the first couple of years, till they actually had to develop, you can say, their mobile application and make it mature enough as to generate enough revenues to compensate their declining revenue stream from the online space. For example, look at how they've done with Instagram and their acquisition of WhatsApp. So everyone is heading towards the mobile space. So as an entrepreneur, focus on the mobile space, and that's where you will generate as much exposure as possible.
How do they get exposure to you, though? I mean, what ideas do you kind of entertain? How do you entertain those ideas? I mean, because if I'm sitting in the audience and I think there's almost my own barrier to entry, because this is a fairly new space in the region, right? So if I wanted to present something to you, how do I get your attention? Of
course, all good deals are always invested in, regardless of wherever you are and whoever you are. Good deals will always be known to the ecosystem. Great smart people will actually be known in advance to actually. So as they always say in Silicon Valley, all good deals are already closed. Huh. Yeah. So what I would suggest is attend, for example. One thing about incubation centers here, what I want to talk about is most incubation centers have never produced a successful startup that has exited. Yeah. Most successful startups, such as, for example, if you have an acquisition here, such as a Maktoob acquisition, or for example, the Soog investment or the Namshi investments, they never started in an incubation center or an accelerator center.
They found their own money. Right?
Well, they did secure money and investments, but they never started attending kind of those events. As I said, good deals are always invested in advance. So my suggestion is, of course, you can always come to an accelerator center. There are a number out. We have Majid here from Infi, who will be talking in the next panel. So if he's in, you can always present to the team there, and actually attend an investors day at the end of the 3-month period. If he is smart enough, he would actually come to the stage after this panel talk.
And start pitching.
Yes.
Let me interrupt here, just because we have some more questions from the floor, and I want to make sure we can get through them. It's open to the panel, so jump in. The public-private partnership model, we're thinking about it in the region, fairly large-scale PPPs. Can you apply it to startups, do you think? What is the role in government? Walid, you're shaking your head. It's hard to see it working, huh?
Yes, I really don't see this working. But I can answer the previous question if you wish.
But I want to see if we can, Khaldoon, if you want to jump, or Chris on the PPPs. In a sense, 2454 is almost a public-private partnership because it's creating the environment for that, right? But go ahead.
That's I'm not investing in 2454. So as a VC, I don't like businesses that are tied to policy. I don't mind organizations tied to policy that foster businesses that then I can invest in. That's perfectly fine, but the timeline isn't right for VC investment for public-private partnership. And frankly, I think that's pretty much global.
I think we'd all agree. Public-private partnership is to support the outside of the ecosystem and all the components of the ecosystem, whether it's government funds invested in as an LP, whether it's to organizations like 2454, people that complement, but the actual startup and the growth of that company should be, I think, completely private sector.
No, go ahead.
So the government can be an investor, but you can't call it a PPP, right? Or at least the way I think of it, all right?
I tend to agree with you. You see it for example, I was in Istanbul and Ankara, and they're doing PPPs at the healthcare sector, very large-scale investments, 25-year management ownership, and you get out. That doesn't work in a smaller space.
And a different agenda, because a government official has a responsibility to take care of all sectors of society, to take into consideration all aspects of the country. Whereas in a business, you're trying to maximize your opportunity and maximize the return to the shareholders. So you'd wind up with some potential conflicting agendas unless the government or the government entity is simply an LP or an investor in the company, like the VC fund is an investor in the company.
There's another question from the floor, and it's one I wanted to ask. What are the governance and legal structures that need to be in place to make the environment work? I was suggesting INSEAD.
Which country?
Well, but that's this is what works and what doesn't, I think, is the way to phrase it, right?
I will have this thing on policies and governance here. So one, for example, there are some issues with laws of incorporations. They have to be more sophisticated enough to sustain, for example, a technology investment round. Today, for example, in the UAE, you can't set up a corporation. You can set up an LLC unless you go to the IFC, which has its own separate jurisdiction.
Right.
Second, other laws which need to be modified would be, for example, insolvency laws. So you still have debtor's jail, which is a dilemma for innovation. So, for example, say an investment goes bad and then there are debts, there's a risk of rewarding innovation with the risk of going, for example, to jail.
Right.
Yeah. So that doesn't work with the technology.
We've been talking about this for years on insolvency.
John,
That's right.
I actually would like to address this question because it's one of the biggest challenges in growing online businesses today in the MENA region. I mean, if you're a company in the UAE or in Saudi Arabia or in Jordan or in Egypt and you've received your first $1 million of funding, if you want to expand into Saudi Arabia, it'll cost you at least $500,000 of funding. So, basically to establish presence, etc. And in many of the cases, you will find that there are some negative sectors or negative list sectors, such as logistics and theoretically e-retail, where the corporation in Saudi Arabia has to be owned 100% by a Saudi national, or at least 51%, of a Saudi national. So actually it's a highly complex region, and people look at it as, one region, 370 million people, whatever. It's actually 5 large markets: the UAE, Saudi Arabia, Egypt, Morocco, and maybe you add to them Jordan. And we hope that the markets that are totally out of order today, such as Iraq, and Libya, and those are very attractive markets, come back and be considered one of the large markets. So one of the things that we've done as iMENA is that we've developed what we call the iMENA platform, which is a connected network of legal platforms in the UAE, in Saudi Arabia, in Jordan, and in 2015 in Egypt and in Morocco, that will enable any of our companies to expand from one market to the other by simply dropping somebody there. They will have a bank account, they will have work permits, they will have contracts to sign, and they will have a sponsor. And
so when they're ready, the structure is set up for them.
So we had to come up. We have invested significantly as iMENA in building this proprietary platform that solves the problem. So we didn't wait for governments to solve that problem. We didn't wait for the region to evolve. The main driver behind the internet opportunity today in the region is consumer demand. Consumer demand is way ahead of investors, is way ahead of founders and entrepreneurs, and is way ahead of corporates. We have to catch up and capture this opportunity before somebody else does it and leave us behind. So we had to go. So this is why we actually structured iMENA in a totally different way. We structured it as a group, and we sort of try to take not minority but significant minority shares in these companies with a view of consolidating all of the group assets in one large company, because we need large companies in the ecosystem, because small companies gets acquired by large companies.
We've done it in a different manner.
Big success stories.
But there are other ways to do
Ahmed,
it.
please.
We've done a lot of co-investments, okay, and we've co-invested with semi-government entities like Dubai Silicon Oasis, and mostly now with 2454 actually. We have a company that's already hosted here, again in the Arabic content space. It's called Lamsa, and it's doing really great. And it's thanks to this hosting that we've managed to solve the visa issues and the market penetration in terms of GCC penetration. But there's another company in which 2454 is also co-invested with us. It's called Falafel Games. So there again, in terms of market penetration, it helps a lot. Falafel Games has just signed a contract with Tango for a MENA distribution. It's a massive contract. But what I'm trying to say here is that by co-investing with those entities, be it in Dubai or in Abu Dhabi, and sometimes by co-investing between Dubai and Abu Dhabi, because we're closing an investment in e-commerce company that has both government entities co-investing in it.
John.
We'll announce this hopefully soon. That's the best way for us to achieve market penetration from a company started from the Levant or somewhere else into the GCC.
And use this as a base in the GCC as well.
Exactly.
But there is a role for government then in strategic ways. Ahmed, you wanted to chime in? Omar too as well, just to say.
But to clarify, definitely there's a role for government, just not PPP model.
Right.
But my one thought is on what the key change in government, in all governments, I think even in the US, that would enhance investment for me as an investor is rapid, consistent application of the law, dispute resolution. I'm much more willing to take a 1% stake or a 3% stake or a 5% stake in a company if I know my rights are protected and I can get redress quickly. I can get whatever issue corrected quickly in the courts. That is, without a doubt in my mind, the number one thing to spur investment in small companies.
Omar?
Sure. You mentioned PPP models. So the typical role of a government, especially in investments, would be, for example, sovereign funds and them participating as LPs in a variety of VC funds or even private equity players. Yeah? What we've seen recently is a trend to actually move down, you can say, the investment stage. They are trying to deploy their own VC funds or actually giving it a go, such as, for example, the 2454 is, I would say, a different approach from government to actually directly inject capital into a certain vertical market. So you actually see governments, and this trend is happening, and you actually see even, you can say private equity players opening up VC, you can say offices. And then you actually see VC offices searching for early stage deals, which makes them early stage investors at the end of the day. And then you actually see angel investors becoming more sophisticated at the same time, becoming more institutionalized. So there's a two-way trend that I could see, and you can see coming down from the government's typical role as sovereign funds or LPs into actually deploying capital directly without having a front office such as a VC firm managing those funds.
Good. I have a question from the floor here, actually a statement from the floor from Ahmed Alfi. Very brave step for you to acquire and invest in downtown Cairo near Tahrir Square. It's a big consumer market. And that's very interesting because before the uprising, 7% growth, $50 billion of FDI. It was late to reform, but a very promising consumer market. If you talk to Majid Al-Futtaim and the work they've done with Carrefour and the shopping centers, the consumer spending, going back to Khaldoon's point, is strong. So can you create that incubator environment? I know it's still in a period of stabilization. We know the role of the UAE to do so. But how do you create that environment of startups in such a large consumer market?
The project in Cairo was the abandoned campus of the AAC in Tahrir Square. And we actually started negotiating with them before Morsi became president, negotiated through that presidency, through the next administration. And it was,
pretty easy process.
Yeah, just we didn't know, the wind kept changing directions in the country.
That's an understatement.
Didn't know which way to put the sail.
Yes.
But at the end, we finally closed the deal in November last year and took over this abandoned campus and have rehabilitated it over the last year. And the idea is to make it a mini tech park for startups. And it's in Tahrir Square, which, if most of you know, probably one of the most accessible points in an hour in the world for people. Probably 30 million people can get there in an hour. And the startups have responded. We have 96 companies renting space there. I would say 90 of whom I'd never heard of before we took over this campus.
96 already?
96 companies renting within the first year.
Wow.
Most of them are small companies, 5, 10 people, all startups.
Does this clash with I thought they were trying to create an internet city about 30 minutes out. Was it Microsoft, Cisco?
It's 30 minutes out at 4 in the morning.
Yeah, that's a good point. That's
and
a fair point.
It's an hour out in the middle of the day, and for the other half of Cairo, it's 2 hours out.
Yeah, fair
So
enough.
the advantage we have is that most of the people can get to the downtown area in an hour, and I think eventually, because the government will never catch up to putting in the infrastructure necessary, downtown's going to be revived.
It's going to percolate on its own, right?
That's right.
Which is interesting. How important is that, by the way, to have that buzz? It's interesting because I worked in Soho in New York and Soho in London, Los Angeles. You see neighborhoods you never thought would be an internet startup area like Santa Monica. It'd be good to hear your thoughts about why it's important to have a vibe in terms of content creation, in terms of company creation. Chris, you come from the outside looking in.
Well, so
how do you create that environment at Suez?
Well, those are two different questions.
Yeah, I know that. Yep.
Let's answer the easy one. Yes, it's important to have that buzz, and it moves around. And where our offices, for instance, in San Francisco, you can spend a week and meet 10 investable companies a day, and not walk more than a half mile away from your office. It's that much of a center and a buzz. And by the way, I'm talking San Francisco, not the Valley.
Yeah, I was going to say, what's that neighborhood? I forget it.
Soma.
Soma, that's right, yeah. South of Maine, is that what
South of Market.
Market.
South of Market, yeah.
Yeah, and it's really south of Mission, but that means south of Market. It is replicated in a lot of other places, usually for a variety of reasons. Can you create it? I think this is a really good example. I mean, we're sitting at this conference in this particular country. They've gone to great lengths to create it, and there are a lot of different entities at many, many levels to foster it. And I think it's on the cusp of happening here. To be sustainable, of course, you need every layer of the ecosystem, and there's certainly some weak links in this hierarchy. But
You're suggesting what legal? We talked about the legal.
No. I'm talking strictly financial hierarchy. Just in terms of it it is easier to get your initial funding and to get support than to get those follow-on fundings. The VC community that looks at growth is not huge. And to support the number of startups that we're attempting to foster in all of these initiatives, it's not robust enough at the next level. Now, of course, startups fall out, some fail. But I do think that's where the likely next weakness will show up.
That's very interesting. Khaldoon, do you share the same view?
Actually, yes. So we see more.
I must be wrong.
No. We see more companies basically failing, not because they have the wrong business models, but because they run out of cash flow. So it's extremely important, and it's a very dysfunctional ecosystem out there. Many of the cases you see the angels following the institutions in the next round rather than the other way around. So this is why in our own case we commit to funding the company from beginning to end. But I would actually like to go back to one very important question that I didn't feel was properly addressed, which is, how do entrepreneurs or founders get exposure to VCs?
Yeah, it's very important.
And going back to Walid's point about falafel, one of our most successful investments is somebody that we met in a falafel line. Basically in a falafel restaurant in Amman while we were lining up, to buy our sandwiches. So what I'd like to say is that,
falafel is in online games and mobile games. It's not.
So I mean, before becoming, and we don't actually look at ourselves as investors. We look at ourselves as founders, just like everybody else, but we are able to fund ourselves as an investment company. But in reality, we're a startup just like anybody else. So we appreciate all the hardships that founders go through to get to startups, and we are totally committed to go back and provide feedback and reply and meet anybody who wants to approach us with any idea, whoever he is and wherever he comes from. And in our company, we've invested in a Libyan founder that we relocated from the United States to Amman and built a company around it that became a company called Open Souk, the most successful consumer classifieds company in the world.
I didn't quite hear you. You said it was what?
Sorry?
What was the company?
Open Souk.
Interesting.
Open Souk, Souk al-Maftuh. We partnered up with a Turkish-German founder that we've never met before, and after the end of the first meeting, we said this guy is one of the greatest founders in the region, and he's been killing it. His company, sellanycar.com, which enables you to sell your car in less than 30 minutes, is the fastest growing internet company in the MENA region, growing from zero to tens of millions of dollars of revenue in less than 18 months. And this is somebody that we have never met before, and we became the greatest friends ever. And just goes forward. So I think, founders should just ask. I mean, there's a very basic principle in life that you'll never get something unless you ask for it. So don't be afraid, go ahead and ask. And if actually somebody does not get back to you, then he's probably the wrong investor. And if you get back to a company 3 months later, and you find that that company is still around, then that's probably the wrong company to invest in. Because if it was such a good company, it would have been taken up by the ecosystem during that period. So I'm one of the big enemies, and that really means a lot to me, of having, basically a VC and an investor sitting in an ivory tower, and, basically entrepreneurs or founders feeling, basically this barrier. Because at the end of the day, if your investor, if your financial investor, if you cannot think of him as your second or third founder, if you cannot think of him as somebody that you'd want to be with in the most distressed time and in the best time, it's just like a marriage, then don't get into that marriage to start with.
Okay, we've got about 15 minutes left. I wanted to open the floor to questions. We had a lot of questions coming in on the iPad. We have a hand up there. If I can ask you to stand up, because we don't have the lighting up, or if we can even raise the lighting on the floor, it'd be great. If you can identify yourself and direct the question to one of the panelists, it'd be great.
Hi, my name's Angela Richardson from Darrow Film Monaco. Just basically, if you wouldn't mind readdressing the panel with their top two investment sectors. Thanks.
We got two of those in. Omar, go ahead.
Sure.
Thank you for doing that.
So if you're asking about the region, there are two major spaces which you should focus on. One, again, and I always emphasize, is the mobile space. Number one is the mobile space. That's where everyone is going. That's where Google is going. That's where Facebook is going. That's where we're going here in the UAE with the Smart Government Initiative. Second is e-commerce. All successful investments that happened in the UAE and all successful transactions that have happened over the course of the couple of years were always focused on e-commerce. Look at Souk, look at the Khaldoon investment. All of them were e-commerce. Reason is, the region is always, you can say, I would say the investor's mindset here is show me the money.
Yes.
Okay, and not show me the users or how many people have registered to your website or app. It's always, where is the money? Question number one. So the easiest way to merge between technology and show me where the money is to do it through e-commerce. So you can always prove from day one that there is a transaction and there's
That's the starting point.
That's right. So e-commerce, and then if you can manage if you can successfully transition it to becoming through the mobile space, giving that Apple, for example, is launching the Apple Pay. Google is doing it. We're doing it here in the UAE. The TRA is actually deploying the M-Government project, which will...
Beyond government, even.
The government is building the infrastructure for every, you can say, private and public entity in the country to actually transact and use your mobile phone as your national ID, your mobile wallet, your health card, etc. So hopefully by next year, it will be up and running, and you can actually transact on it using your mobile phone.
I have to say, I think the government's almost too efficient. I had my first traffic violation after 4 years of living in the UAE.
You got an SMS.
Yeah, got an SMS. And they had it on video, and I couldn't even dispute it, but I had to pay up. Very painful process.
You can pay up through the mobile app, which is part of the Ministry of Interior's application.
I was trying to avoid paying in general, but my argument wasn't very sound. I was happy. I mean, I had to pay 2,000 dirhams, but I had the guys in front of me were paying 23, 24, 25,000 dirhams, so I felt like I was like the discounted rate. Walid, the top two that you're in.
Well, definitely anything related to Arabic content on mobile. Ahmed was mentioning the edutainment space. We're very hot about this. We're involved in payments and in music streaming. We're involved in enterprise software, as Chris was saying, he's out about this. We've invested in 25 companies over the past 4 years, about $30 billion. And
in total, 30 million?
In total, yeah. Okay. Our total funds under management are 80 now. We're at $80 million. But we still have a lot of dry powder, mostly for Lebanon. Going back to the what you mentioned about government resolutions, Lebanon has announced a subsidized program whereby the central bank subsidizes the local banks into investing in technology companies. I think this is a great model to be followed by GCC or other rich countries. Thanks to this, there's a $400 million that are going to be invested in the ICT sector, purely in Lebanese companies.
Wow, that's a pretty good fund.
That's one of the biggest tickets you'll find in the region, out of a tiny, small, relatively poor country.
So if they create the right playing field, they'll definitely come in. Chris, you're...
Thanks to this, we just raised a $65 million fund.
Wow.
Because of this.
From the U.S. perspective, this is always good to get a West Coast view of what's next.
Well, as I said, I mean, when you asked the 3 to 5, I was really focused on enterprise. If you're looking at today, I do think you have to follow the consumer. That's where the most readily visible traction is, and in this environment, you need that to get funded.
Khaldoon?
So our two favorite sectors are classifieds and e-commerce marketplaces. And I think it's very important. So I'd like to actually touch on a point that Omar said. I think it's very important to differentiate. E-commerce is a big world, and there are many things around it. And I think it's important to learn. So Omar mentioned, basically that the most successful internet companies or investments are those that are actually in e-commerce. And I actually disagree on that. I don't think it's capital efficient to invest $100 million to get to $1 million of profit, while there are other business models where you can invest $5 to $10 million to get to $1 million of profit. And I think, basically, if you look globally Alibaba, one of the most successful internet companies ever, is not actually an e-retail e-commerce company. It's mostly marketplaces.
Yeah.
Their margins are 40 to 50% versus the margins of 5 to 6% that you see in companies as, Lazada or Zalando or, even Amazon, and where Amazon is trying to diversify and go into content and movies online and cloud services, etc., etc. E-commerce models such as daily deals, such as, Coupon, etc. Coupon itself has pivoted now. It has become, a group called Treperna. It has become a travel marketplace. This is where you come to the most important, basically, criteria of an internet business model: scalability.
Yeah.
Why is Google the most successful internet company ever? Because they built a search engine once, and then it's used trillions of times. You go to a business model like a daily deals business model, where every time you need to put a new deal, you have to go and sign a new merchant and agree a new deal and upload a new product, and after a certain time, you get merchant fatigue. So what's going to happen in e-retail, I think, in the MENA region, is that it's going to be an omni-channel, i.e. the existent large retailers who have the warehouses, who have the last mile delivery, and who are able to buy products at the cheapest prices ever because they are the distributors and partners for those international brands in the region. Those will be the big winners. Plus, even look at, so in the United States, probably, the majority of what's sold online is manufactured in the United States. In China, it's probably 100%. In Turkey, the most successful e-retail companies, such as, for example, take Moderator, are companies that manufacture almost 95% of what they sell in Turkey. So they don't have to import it, and they sell it in Turkey. Here in the MENA region, we're importing everything that we sell online and just trying to shift it from one place to the other. So this is why I think people have to be really, really, really careful about retail. Raising $500 million does not mean that it's a huge success. It could be, the biggest loss ever in an internet business model. I think people should look at truly scalable business models. Content is one, but we're more transactional, so we're more in you online food ordering. You establish a relationship once with the restaurant, and then you continue shifting orders from consumers. So that's a very scalable business. Automotive marketplaces, etc. So we really like classifieds and marketplaces, and I think people have to be really careful about e-retail.
So, Ahmed, you're going to comment on something. One of the things I was looking at, for example, the last APEC meeting that took place in Asia, and this idea that we tear down barriers, so you have a trans-Pacific trade partnership. Now we're looking at transatlantic trade partnership. And one of the things that's always held back this region in my kind of 20 years of covering it is we still have internal barriers to trade. It's going back to what you're saying, Khaldoon, is that we really don't knock down barriers that allow the fostering of technology companies that can go on the scale, right? The UAE is a market. Saudi Arabia is a market. Egypt's a market.
That's why we favor digital goods.
The GCC is a market.
That's,
it's getting somewhere, but
commend the GCC on getting a market and having everybody. But I don't see that problem is going to be solved anytime soon because of the socioeconomic differences and the spreads and all the politics involved. I don't see that being solved anytime soon. So get used to it. We got to deal with it as business people and as investors. We have to get used to it. I just want to make one point on the investing ideas. I invest because in Egypt we have a slightly different makeup of entrepreneurs. I actually like to invest in very geeky things and in inventions and in people with patents. And our portfolio of companies have filed 13, 14 patents in the last 3.5 years in the US. 5 or 6 have been granted so far, and the rest are in process. But chip design, very, very technical, geeky things. So if any of you are interested in any of that stuff, we can talk about it afterwards, but it's boring for most people.
Another question we had from the floor. This is an obvious space, talk about scalability. It's not a very mature real estate market. And the question from the floor is we have a problem with transparency in the market in terms of real estate and agents and basically trying to snatch an opportunity to charge you a fee. Is there space in here now? We've seen what's happened in the UK market where I was living before I moved here. Very active online real estate, advertising, agencies, fees related? Do you think there's an opportunity that's really not been addressed online?
Absolutely, and one of the most successful internet companies in the UAE that I think is more successful, profitable than any other e-commerce company is a company called Property Finder. And Property Finder is a classified real estate company. There are some other very successful companies, including a group called JRD, Just Rentals and Just Property, and we're seeing that in other markets. And I think the UAE will have some huge wins in basically companies that are in the real estate sector, including going into what is referred to today as augmented marketplaces, where you actually complete the whole transaction online. And this, especially with the dominance of developers in the UAE in that space. So I think there are sometimes you think like Coca-Cola, Marlboro, etc. So the Saudi market for Coca-Cola is a market by population. And then you have internet business models which go by population. And those includes automotive, and those includes those that are related to real estate and to jobs. Another extremely successful internet company, which I think, one of the best case studies in the MENA region, is a company called Bayt.com. And that company has actually also had a very strong socio-economic impact on the market by helping people find job opportunities, by helping basically, the flow of labor and the flow of talent from one market to the other. All of these companies fall under the category of marketplaces, and all of them did not need hundreds of millions of dollars of funding. They were funded with tens of millions of dollars at max, and they have actually attracted top tier, the smartest international investors that are out there, the tiger capitals of the world and those kind of investors.
Okay, we just have 1 minute left. I want to have just one person jump in on this. It's a story I'm covering today. The potential of Iran, of the P5+1 comes through. Jim O'Neill, formerly of Goldman Sachs, was saying it's next 11 country is one because of the size of the population, the educated population as well, per capita income, natural gas and oil. Does this group look at Iran and say that is a very large market if we can get the politics right? Anybody?
It's a different market. It's a totally different market.
If you get the politics right, exactly.
Say that again?
It is definitely a very interesting market. We haven't invested in Iran, but if you get the politics right, yes, we would be open to that.
Good, Ahmed?
The politics in Iran will probably be like the politics in Egypt over the last 4 years. The wind comes this way 1 year, goes that way the next year. I would just, wait for a while.
It's a good way to finish. Thank you very much for the questions coming in on the iPad. I appreciate it. Gentlemen, thanks for covering the full range of what we were supposed to cover for the last hour. I appreciate it. Nice round of applause for the group.
Thank you all for your insight, and please now we will go for a break.